As I said, you beat both on revenue and you beat on earnings per share. That's a nice story. What is the real story here, though? Because there's some softness in the vehicle market.
I would say that the story from our perspective is the third quarter was very, very much on plan. When you look at the production downtime that we had and production being essentially down 26% year over year. Within that, though, we still generated very solid results at an enterprise level, $2.5 billion of profit, 7.5% margins. In North America, importantly, $2.1 billion and 8.3% margins, which I think really demonstrates the resilience of the business, even in a quarter where production was down 26%. Importantly, we took a big step towards getting our dealer inventory in line as we go through the fourth quarter, and we now expect that our dealer inventory at the end of 2017 will be lower than 2016, which will set us up for a good start in 2018.
So, which is something we've talked about before, where you are in inventory and the need to get that down. But if you were to break out that 26% reduction in the production between softness in the marketplace on the one hand and planned changeovers in models, how would it break down?
I would say roughly 50-50, David. About half of the reduction, just over 100,000 units, was related to planned downtime on full-size trucks and crossovers as we prepare for launches. The other half was to align supply and demand, primarily around passenger cars, as we continue to see segment shifts there. And again, we made a big step, taking our inventory down from 980,000 units at the end of the second quarter to 860,000 units at the end of the third quarter, towards right-sizing our inventory. And we still expect to end the year somewhere in the range of 800,000 units, which will be down 50,000 units year over year.
Chuck, you mentioned the product mix, and if you draw a line through the trends, you end up with General Motors being a truck company, not a car company. Is that where you're headed ultimately?
Well, I think that we end up being a full-line manufacturer like we have been historically, with shifts different than they have been in the past. Trucks, full-size SUVs, certainly. Crossovers, vitally important. And as we've been talking about, that's one of the strengths that we have, and one of the reasons our business model has been so resilient is our crossover launches, and those segments continue to grow. And, on a go-forward basis, passenger cars are still important. The compact segment is one of the largest in the world, still one of the largest segments in the U.S. So we would expect to continue to compete and win in that segment as well going forward, just at a lower level than what we've seen historically.